if you want to beat the S&P index, you need something better than a typical good company. A well-run company will at best keep up with monetary inflation. You need a monstrous digital monopoly like the Magnificent Seven to outdo it. But the greatest digital monopoly in the world, Trish, is the digital monopoly of money. I mean, the greatest digital network in the world is Bitcoin. Bitcoin is Facebook for money, right? It's Google for money. If all the smart, rich people in the world decide that they want to store their money in a bank in cyberspace that will never be debased and hold it for the next 100 years.
Saylor begins by acknowledging the strength of the US dollar in comparison to other currencies. According to him, most global currencies are either pegged to the dollar or are in a state of decline. Whether it's the euro, Swiss franc, or Singapore dollar, their stability is tied to the U.S. currency. In contrast, weaker currencies like the Argentine peso, Nigerian naira, or Turkish lira are continuously depreciating against the dollar, reinforcing the dollar's hegemony. However, he argues that even the dollar is not immune to inflation. Saylor disputes traditional measures of inflation such as the Consumer Price Index, CPI. Instead, he suggests that the best gauge of monetary debasement is the annual performance of the S&P 500, which typically grows by 12% annually. This indicates that the expansion of the U.S. money supply, M2, is outpacing conventional inflation figures, eroding wealth over time.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think that if you look at all the currencies in the world, the strongest currency in the world is the dollar. And so everybody in the world has either got a weaker currency, which is collapsing, or they're on the dollar standard. Like the euro is pretty much pegged to the dollar, the Singapore, the DROM, most of the quote unquote good currencies, the Swiss franc, etc. They're pretty much pegged to the dollar. And then the bad currencies, the weak currencies, the peso, the naira, Egyptian pounds, Lebanese pounds, Turkish lira, they're collapsing against the dollar. So it seems pretty clear that the dollar will continue to spread, but there is an inflation problem. The inflation rate in dollars is not the CPI. It's not 2 or 3%. The best way to think about monetary debasement is to look at the S&P index. If the S&P is advancing 12% a year, that's the rate at which the money supply is expanding in dollars. So your hurdle rate, the rate at which you have to generate an investment gain in dollars in order to not get poorer, is probably the S&P index. That's the cost of capital. And that's a pretty good surrogate for the rate of expansion of the US dollar M2 money supply. So over the last 100 years, the S&P index generally expands about the same rate that the dollar expands in money supply. So if someone gives you an idea to generate 3% after tax, buying bonds at 5% that are 3% after tax, that's kind of like underperforming the cost of capital by 9%. You're getting 9% poorer every year. So anything that isn't beating the S&P index is making you poorer in dollar terms. What's beating it? Well, the S&P, when you invest in the S&P and your money goes up 10% a year with the S&P, you think you're getting richer. No, you're just staying rich. You're staying as wealthy as you were. The Magnificent Seven's beating it. So over the last 4 years, maybe the S&P's up 13, 14%. The Magnificent Seven's up 25, 26%. It's doubling it. This is a no-brainer. It's obvious, right? NVIDIA and Apple and Google and Microsoft and Meta, those are monster stocks, and everybody knows they're the most powerful companies in the world. So they outperform. Everybody else in the S&P underperforms. So 1% of the companies generate most of the gains. The other 98, 99% don't really generate much gain. Bitcoin's doubling the Magnificent Seven. So in terms of is Bitcoin the answer? Yeah, sure. If you want to beat the S&P index, you need something better than a typical good company. A well-run company will at best keep up with monetary inflation. You need a monstrous digital monopoly like the Magnificent Seven to outdo it. But the greatest digital monopoly in the world, Trish, is the digital monopoly of money. I mean, the greatest digital network in the world is Bitcoin. Bitcoin is Facebook for money, right? It's Google for money. If all the smart, rich people in the world decide that they want to store their money in a bank in cyberspace that will never be debased and hold it for the next 100 years, right? Isn't that the best investment by definition? Because every other company has some kind of crack in its armor, some kind of attack surface. All the other companies get taxed, they have employees, they have headquarters, they get hit with tariffs and fines and etc. So find me a big tech monopoly that is global, that sells a product that everybody wants, nobody can stop.
It's you.
And
it's
nobody
MSTR.
understands. No, it's Bitcoin.
Saylor provides insight into MicroStrategy's unique approach to Bitcoin investment. He clarifies that the company's Bitcoin strategy complements, rather than competes with, Bitcoin ETF. While ETF offers straightforward exposure to Bitcoin's price movements, MicroStrategy provides a range of financial instruments, including high-performance equity and Bitcoin-backed bonds, to attract institutional investors. Saylor likens MicroStrategy's business model to an oil refinery. In this analogy, crude oil represents Bitcoin, while MicroStrategy acts as the refinery that transforms raw Bitcoin exposure into refined financial products tailored for different types of investors, whether they seek equity, fixed income, or derivative instruments. The company aims to make Bitcoin accessible and attractive to every segment of the financial market.
So after 16 years, it has been copied 10,000 times. They all failed. It's the winner, right? It's the network that all the smart, rich people in the world chose. It's the bank in cyberspace. If you show up in a city and there's 10,000 banks and you have a bunch of money, and the question is, which bank should you put your money in? You go find every smart, rich person that you know in the city and you say, hey, where do you put your money? And if they all put their money in one bank, you're probably not going to put your money in a bank that's a million times smaller than them, that only has poor, stupid people. So it was copied. It's the winner. It is the bank that's of choice of the smart money in the world. And will it be banned? You couldn't know that for 15 years, but the IRS legitimized it as property in 2014. The SEC approved a host of Bitcoin ETFs in January of 2024. Today, it's held by nearly 100 publicly traded companies. Every major regulator has certified it as a commodity, not a security. That was a judgment by the former head of the SEC under Trump, and that's the judgment of the current head of the SEC, Gary Gensler. So it's not getting banned. And that takes us to the third question is, will it be hacked? And Satoshi's got about $70 billion in a bunch of wallets that any hacker could have if they could crack the code. And it's been there for 16 years and nobody's cracked the code. It hasn't been hacked. And the reason it hasn't been hacked is because it's defended by a wall of digital energy, about 730 exahash. That's more computer power than all of the computers that Amazon or Microsoft or Apple could, working jointly together, could generate. So it is the strongest wall of computer power in the world, stronger than any nation state can muster, stronger than any company can muster. And that computing power, combined with the fact that there's approximately $800 billion of actual money deposited in this bank over the past 15 years, combined with hundreds of millions of holders, combined with about almost 20 gigawatts of electricity, which is like 20 full-on nuclear reactors. 20 gigawatts is more electrical energy or more pure energy than drives the entire U.S. Navy. That's how much power it is. So Bitcoin's really defended by power, a lot of power in political, economic, digital, and electrical form. And there's no way to finesse it. You can't kind of spoof it or trick it. You just need 10 times as much computing power as exists on the surface of the earth in order to crack it. That's why no one's cracking it. As to the first question, no, we don't compete with the ETFs. They basically sell spot Bitcoin exposure. If you want 50 ARR, 50 vol, 100% upside and downside as a simple digital property instrument, you would buy the ETF, and they're perfectly fine investments. I mean, very straightforward. If you want high performance equity or optionality, you would want our equity or the options that trade above our equity. And if you want Bitcoin backed bonds or some kind of Bitcoin fixed income instrument, you would buy something that we were selling. So we're very complementary to them. And of course, both investments work well, because at the end of the day, all the money invested in any of these instruments is used to buy Bitcoin. And there's only 450 Bitcoin available for sale every day by the Bitcoin miners. So when that Bitcoin gets purchased, you have to take the price up in order to find another willing buyer at a higher price level. So that's a very virtuous competitive cycle there, and we're very complementary. With regard to my suggestions for potential investors or people that are interested in Bitcoin, I would say before you put money into Bitcoin, put time into Bitcoin. If you go to hope.com, remember Bitcoin is hope, you can find lots of courses on Bitcoin, lots of books on Bitcoin, lots of videos on Bitcoin, lots of research papers and resources on Bitcoin. You could just go and Google me on YouTube, and you'll find lots
or Michael.com,
of videos.
Right? You got Michael.com.
Yeah. Go to Michael.com, go to Hope.com, read the Bitcoin Standard. MicroStrategy is a Bitcoin treasury company. What we're doing is securitizing Bitcoin. We're offering fixed income instruments or high performance equity or high leverage derivatives that appeal to all of the capital markets participants. Since there are lots of people with pools of money, they have to trade options, they have to trade convertible bonds, they have to buy equity, they want fixed income. So MicroStrategy is converting what you'll call crude capital into refined capital. Think crude oil goes in one side of the refinery, and gasoline and kerosene and toluene and 27 petrochemicals come out the other side of the refinery. And so we're happy to do our part, but the big invention is crude oil, right? We discovered infinite energy, in liquid form. MicroStrategy is a company commercializing crude capital, and crude capital is just higher performance than the thing it replaced, which was digital capital is better than analog capital, and will be.
Saylor also draws attention to Bitcoin's supply dynamics, emphasizing that only 450 Bitcoin are mined and sold by miners each day. As institutional demand grows, the competition to acquire Bitcoin intensifies, driving the price higher. This creates what Saylor describes as a virtuous cycle, where rising demand propels Bitcoin's value upward, attracting even more investors. He advises those new to Bitcoin to first invest time into understanding the asset before committing capital. Saylor recommends resources like the Bitcoin Standard and directs viewers to educational platforms such as Hope.com and his personal website, Michael.com. His message is clear. Bitcoin offers hope for those seeking a long-term store of value in an era of monetary expansion.
Please like and subscribe my channel.